Much has been said about the government's stance, approach and policy in the retail sector. The 2016 FDI policy eased local sourcing norms for foreign brands that qualify as state-of-the-art and with cutting-edge technology. The policy allows up to 49% investment via automatic route and more than 49% needs government approval. As per the policy, to qualify as a single brand retail manufacturer and the owner of a brand, at least 70% of the products should be manufactured in-house and at least 30% sourcing should be done from Indian manufacturers. Such an Indian brand, says the policy, should be owned and controlled by resident Indian citizens or companies owned by resident Indian citizens.
In the manufacturing space, this is unheard of. Indian manufacturers were always open for 100% FDI on the automatic route. And with this condition in the SBRT space, again, you've just brought about more uncertainty in whether FDI in a straight manufacturer is even allowed, up to more than 50%.
Okay, so I'm not going to expect you to take names, but from the business landscape that we currently operate in, how many of these manufacturers are not Indian owned and controlled?
The question, Paiswani, to ask ourselves is how many of the existing Indian owned and controlled manufacturers need foreign capital, which they are not able to raise because the dilution would cause their companies to cease being Indian owned or controlled. And I can tell you this is a structuring problem in a lot of transactions now.
Okay, and then they will have to sort of
go to the government,
abide by all the conditions and then go to the government for the approval.
That, again, and thus bringing something that was on the automatic route effectively to the approval route.
Okay, for this condition, say today an Indian manufacturer owns 100%, right? You can still get what, 49% and be Indian owned and controlled and not have to go to the government for approval, right?
Yes, when investors put in money, it's not just the legality of that immediate transaction which is of concern to them. They would want a clear path to exit. They would want to know if there are policy level implications in taking the company public by IPOing the company. If a company's foreign investment is on the brink, they would want to know if enforcing a drag on the promoter in favor of the deepest pockets, which tend to be foreign, is going to be legally enforceable. A condition like that chills foreign investment, not because it calls the immediate legality of the transaction into question, but it just blurs, it just muddies the water for the future.